Welcome, welcome, welcome. I'll just get everyone in the room. We always like to start on time. So let's let everyone join us. Tell us while you're coming in, where are you coming from? And also what I'd like to know is, have you seen the presentation, the Diversification Mastermind before? Sorry, not Mastermind, Masterclass. So let me know in the chat box. I'd love to hear from you, please. Right, is it only giving me hosts and panelists? No, everyone should be able to chat now. People can chat with everyone, so you should be able to chat away. Let me know in the chat box. Let's start engaging. I don't know where you are in the world. We do these at different time zone. It is 8 p.m. my time. It is a freezing night here in South Africa. And so I am going to be engaging. I'm going to be having some fun. And I want to make sure that I'm keeping you engaged in terms of the overall process. So, yeah. Tell me where you're from. So we've got Durban, Frictus from Durban, Randall has not, Andres from Magaliesburg, Santon, Kurt is from Durbanville, Victor is yes, Peter's yes, Zanele is good evening from Pretoria, Cape Town, Judy from Joburg, Sage from Durban, and one from Cape Town, Conrad Maritz, Karen from Cape Town, Sipho from Sasolburg. Wow, we've got a very South African crowd tonight. Not seen the masterclass before. Niels from Pretoria, Pat from Atlanta. So brilliant. Well, I'm glad that we've got so many different people from all over the place. Conrad, not yet seen the presentation, so just coming through. Perfect. Okay. Well, you're in for a bit of a treat here. So, in my opinion, this is one of the presentations that I enjoy a lot. And one of the reasons for that is that it's going to share with you some of the insights that I've gathered over the last 20 years. You know, we live in very interesting times. We live in uncertain times. Some people would see them as a threat. Some people see them as opportunity. We're going to discuss that quite a lot tonight. And someone's saying no video showing. Can we just confirm whether you can see my screen or not? So it should be showing you my screen. And you should be seeing Diversification 5.0 Masterclass. Yep, Shane's saying he can see. Glenn is from Dainfern, Lorraine from Durban. So brilliant. I always enjoy seeing where everyone's coming from. So thanks for engaging with me. I appreciate it a lot. But what I'm going to share with you, on this masterclass is I've watched people invest from 171 countries around the world. I've watched them invest over $1.3 billion. I've facilitated or been part of the transactions. And there's some patterns that I've noticed where people are, doing the same thing sort of over and over again. And, I love the saying by Tony Robbins where he literally says, you'd have to be a bit of an idiot not to notice the patterns. And I think that's often how I feel. In the beginning, it all feels very overwhelming. There's a huge amount of information, a huge amount of things that are taking place. But over time, you start to realize that there's patterns that are happening over and over again. And, we can either copy those patterns and we can get the same results as those people, or we can try and, come up with all the stuff ourselves. So without further ado, I want to share with you the 5 important lessons from the wealthiest sophisticated investors. And let's get straight into it. So I always like to start with a question. And the reason being is that a question engages you and it makes you think. So I want you to just take some time. And what would it mean to you in 12 months or less to be earning $5,000 passive income without any hassle or complexity? So just think about that. What would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? If you want to chuck it in the chat box, go for it. Most importantly, I want you to engage. I want you to engage your brain. So what would it mean to you? How would it impact you? How would it impact your life? Kurt, you're asking whether it be monthly, whether it be yearly. It's different for different people, but the point being is that too little fantastic. So, at the end of the day, I'm asking people about building globally diversified passive income. And I'm asking, what it would mean to them. Some people might say per week. Some might say per day. How would you like a system which statistically would help you get there? So 5 times, 5,500%, 5 times. Faster, simpler, and safer. And it's according to Harvard. So, yeah, we can figure it all out ourselves or we can copy. So I can see there's some great comments coming through, and I just want to look at a few of them before I kind of keep going. So I love the one, too little. Start to financial freedom. That's exciting and a dream come true. It would impact me in a positive way. Will help a lot. Great start. My objective is that. It would be a great step in the right direction. Brilliant. Sure. I would go for it. So hopefully this got you in the room from an engagement perspective. What we're all about is living life unlimited. So what that is ultimately about freedom of choice. And again, we believe that you do it through diversification 5.0. So I want to start with a story. I like to tell stories because I think they explain things better. So there were 2 brothers, and it was 1976, and both brothers were living in Zimbabwe at the time. It was called Rhodesia. And the one brother tended to be quite reactive. So there was a lot of problems politically, economically, and socially. And he decided for him and his family, it was time to leave Zimbabwe. And so they literally packed everything they could in a car. That's all you were allowed to take out of the country, was everything you could fit in a car. They had a Morris Minor or a Renault or whatever this car is, something similar to this. And they literally packed everything in the car and they drove from Zimbabwe down to Durban. And what was interesting is that brother spent his whole life reacting to the economy, to the politics, to the social, etc. And he had a tough life. I'll tell you more about him later. But ultimately, he was like a cork on the ocean, reacting to what was happening in the external environment. There was a second brother, and this brother decided, he was a bit younger, and he decided to stay in Zimbabwe. And in 1980, he opened his first offshore bank account, and he started investing offshore. And he built up offshore assets, and he built up offshore income. And in 2003, he decided that he wanted to leave Zimbabwe, but he bought his way into Australia. You can buy your way into countries like Australia, Europe, America, etc. He bought a house for cash in Brisbane, a very nice house in Brisbane for cash. He sent his kid to one of the top private schools called Churchy in Brisbane, and his kids subsequently went on, to do really well in rowing and to get offered different bursaries around the world at some of the top universities. And I always tend to joke, but most importantly, he didn't have to work for an Australian. People laugh at me and they think this is not that important, but I actually think it really is. Because, I've met a lot of people. I met one gentleman in Australia who said, he used to be a general and now he's a foot soldier. And I don't think there can be, a lot of things worse in life where you spend your 20s, 30s, and 40s building something up and then starting again in your 50s. So, to be able to be your own boss, to have that freedom is really quite important. So the question I got for you is, do you want to be brother number 1 that is very reactive and kind of a cork on the ocean and susceptible to the economy, the political, and society, or brother number 2 that is proactive, takes control of his life, and ultimately has the ability to make a choice of freedom? Brother number 1 or brother number 2? Now, I just want to point out that brother number 2, there's nothing I'm going to say tonight that is a get-rich-quick scheme. It does not exist. In my experience and my understanding, there's no such thing as a get-rich-quick scheme. You'll notice that brother number 2 took 23 years worth of planning and proactivity to allow him to be able to have that freedom of choice. It doesn't happen overnight. And so it's really important that you take that into account. So this was the first brother. It happened to be my father. And this was actually me on my first property project, construction site, when I was 13 years old, and actually helped renovate this property. But what's more important is that I learned a lesson from my dad. We were all taught to go to school. We were all taught to, work hard. We were all taught to go to university and, ultimately to get a good degree and go and get a great job. And that's exactly what my dad did. And that's what society teaches us. And my dad, went to school, he worked hard, he went to university, he became a chartered accountant. He ultimately became financial director of a listed company. And yet, when my dad died at the age of 59, he died broke. And I was astounded. I was like shocked at what was actually happening. And, I went and did some research, and I learned from a guy called Dr. Hannes Dreyer. And what was really interesting is that 94% of people in England, Australia, and America at the age of 65 are either dead, broke, or reliant on the government. So they're the same as my dad. They're either dead, broke, or reliant on the government. 5% of people are financially independent. And people are like, yay, I want to be financially independent. But what they don't realize is that you take the financial industry and you earn 25% less than your last paycheck, and then you're financially independent. Now, I just call that financially trapped, which means that 1% of us, if 100 of us start a race, one of us is literally finishing the race. No one is winning the race. One person is finishing the race. And I decided at a very young age that just wasn't how it was supposed to be. And so I went out and I did what many of you have probably done. And I went and read books like Rich Dad, Poor Dad, and Real Estate Riches, and loads of other books, Money, Master the Game, Unshakable by Tony Robbins, Think and Grow Rich. And I could go on and on and on with all the books that I went out and read. And, I spent 14 years of trying to find, between university degrees and books and courses and mentors and everything in between. And they talk a lot about the E, the B, the S, and the I. Robert Kiyosaki talks about this. And it's the employee, the self-employed, the business owner, and the investor. And he goes into more detail, and I'm not going to go into all the detail here tonight. But, on the left-hand side here, you've got the employee. It's all about active income and self-employed. And it's where sort of 95% of the world, people are, but they only have 5% of the wealth. And then on the right-hand side, it's all about passive income. And that's the business owner and the investor. And they are less than 5% of the world's population and 95% of the world's wealth. And most people are trying to figure out, how can they get to this stage? How can they be this investor that ultimately is getting this globally diversified passive income? Or better still, the word I like to call it is freedom. So this is where I came across my first myth. And there's 10 different myths that I discovered through my time. And the first myth was that I had to do it all myself. If you read this book by Robert Kiyosaki, he literally says, you must go out, you must walk the streets, you must look at 100 different houses, you must make an offer on 10, you must get accepted for 3, and you must buy 1. And I thought that the whole philosophy was that I had to go and do it all myself. So I was out there and I was hustling and I was trying to walk the streets and I was trying to buy properties in London and South Africa and do new developments and everything else. And I had this massive epiphany moment that it was so much easier if I just worked with other people. And I'm going to share with you tonight how you can actually do that, and how there's a golden formula for success on what you can do, the way you can dramatically reduce risk. You can get access to far better opportunities, and you can also, not necessarily have to, put all the time in, because most of us are time poor. It's all about getting the right information, the right partners in the shortest amount of time that can help us get the results. So where did that all start for me? Well, like I said to you, my first property project when I was literally 13 years old, and I helped renovate a bedroom into a double bedroom bathroom ensuite. My first property development was when I was 22. I bought a house in Rondebosch with my business partner, and we converted it into 6 townhouses. I did my first property in London when I was 24. We bought a 3-bedroom house and we turned it into a 5-bedroom house. I'll talk more about that just now. And at the age of 25, I went on my own. I started a company called IPS, International Property Solutions, and I helped thousands of people invest in properties, houses and apartments in South Africa, hundreds in the UK, hundreds in Australia, and hundreds in America. But I noticed over this time that there was a major issue, because the top 1%, the wealthiest top 1%, were investing in different assets from the rest of us. Again, you read this book, or if you do any courses by Dolph DeRuss, he will tell you, get into commercial property. If you read this book by Robert Kiyosaki, Real Estate Riches, he'll tell you, get into commercial property. And yet there were all of us running around investing in residential property, houses and apartments. And I was like, why? Why is it so hard? And the problem is that The 99% are stuck in country. We're stuck, investing only in local deals. There's massive barriers to entry if we want to get into commercial property or commercial real estate or, ultimately investing overseas. And that's not even taking into account all the complexities of tax structuring. If you want to invest overseas and you've got to go and open bank accounts and structures and tax and compliance, it's such a large hassle factor that the 99% tend to avoid it. And then two major things happened for me that really changed the way I viewed things. Because again, remember, I was the guy running around buying houses and hustling and doing houses and apartments on my own. And then this deal came along in late 2008, early 2009. So we just had the global financial crisis. The whole world had melted. And there was a developer called Barratt Homes that's one of the top developers in England. And there was a development in Wimbledon. And I sent this out to my investors. And I said, listen, this is a 40% discount, an 8% yield, which means an 8% income, and it's cash flow positive from day one. And down the bottom here, I literally said, I don't care what happens with the market values in the short term. This represents a real opportunity. And it was fascinating for me because we were buying buildings that used to be £320,000 that we could buy now for 160 to 180,000 pounds. They were cash flow positive from day one. They were fully furnished, fully tenanted, and it was a no-brainer to me. But the problem is we had to buy 48 units and we needed £10 million cash. And I didn't have £10 million. So I thought, oh, well, it won't be that hard. I'll just go to all my investors. I had 2,500 investors. I was like, right, guys, ladies, this is a no-brainer. Let's participate. And I couldn't get people to work together. And it created so much pain for me because, again, I tried to hustle and I tried to go and see Barratt Homes. I said, okay, well, I can't buy 48 units, but can I buy one? And the guy literally laughed me out the room. And that's why I talk about moms and pops, because you've got to get out of the rats and mice. You've got to get out of, investing at the level where everyone else is investing, because that's where the real opportunities actually, face themselves. A second story that came about, it was Bondi Beach, Sydney. It was 2009. I bumped into two very wealthy gentlemen, and I was like, what are you investing in? And I just want to put this in perspective, and I don't say this to be arrogant, but I want to give you a bit of perspective. I told you I spent 14 years studying about investment, money, property, wealth. I basically have an honors degree cum laude. I have a master's degree cum laude in the property construction space. I have a CRS out of America, which is a certified residential specialist, ARPP out of England, which is the Association of International Property Professionals. I've got the PDP out of the business school, which is the property development program, the highest property development course you can do. I've read all the books, I've been on all the courses, I've, been to the Behind Australia's and the Kurt Coetzee and you name it, Tony Robbins's, I've been all of them. And yet I go along and I meet these two wealthy people. I'm like, what are you investing in? And I said, medical buildings. I was like, really? I've never heard of medical buildings. I was like, well, why in medical buildings? And they said, well, think about it, Scott, no matter what happens in the global economy, people need doctors. I'm like, okay, that makes sense. Secondly, doctors never leave their premises. And thirdly, doctors are very good at being doctors, but they, tend to, not be very good accountants. So they sign very good long-term leases. I was like, what? Like, that's a no-brainer. Like, why didn't I literally learn that in the first week of UCT? Like, it should be property 101. Anyway, long story short, I said, right, I want to participate. There were 8 slots, 5 million Australian dollars each. I went to my investors again. We couldn't raise anything. And so again, I missed that opportunity. It went on to be a listed company worth 700 million Australian dollars. But both of these two, real life stories created so much pain and intensity for me that we created Wealth Migrate. And in 2014, we did our first commercial deal in America. We bought 6 buildings, a portfolio of $16 million. And we had 82 investors from 5 different continents. And it was the first time I got involved in commercial. And ever since then, the rules of the game changed for me. Because what I realized was that residential for me was high hassle, low return. High hassle, low return. And commercial for me was low hassle, high return. Low hassle, high return. And so what my strategy had been up until that point was trying to do it all myself. Run around, hustle, find deals, broker deals, try get mortgages, try and manage the tenant, deal with all the admin and the hassle. And then in 2014, I realized there was a much better way to do it, and it was through getting the right information and the right partners. And by partnering with other people that already had the experience, I could dramatically mitigate the risks and I could increase the return. So there'll be a lot of you here today that are watching this, that this is your strategy. I must do it all on my own. But I had this epiphany moment. The collaboration and partnership was a far easier way to get the results with a lot less hassle, a lot safer, and quite frankly, got far better results. So that's my story. We've gone on now to help people in 178 countries, a value of 1.3 billion. We've paid out, over $30 million in exits and dividends, et cetera, et cetera, et cetera. So whether people want to invest in America, England, Europe, Australia, South Africa, we've done it many, many, many times. So, the question I've got is, why do people diversify and what are they looking for? The number one thing that I tend to find is that people are looking for preservation of wealth, or what is called wealth preservation. The number two reason is plan B. It doesn't matter where you live in the world. It could be India, it could be China, it could be Dubai, South Africa, and even Germany, Australia, New Zealand. They're looking for a plan B. They don't want to have all their eggs in one basket. They're wanting peace of mind. They're wanting to know that they don't have all their money in one place. So they want peace of mind to know that through diversification, they're not as susceptible to market shocks, political shocks, social shocks, etc. I'm going to tell you a bunch of stories tonight to explain this. But what I found, the word that resonates most for me is freedom. They want to have the freedom of choice. They want to be able to choose where they live, where their children go to school, where their children go to university, who they work for, what do they do with their time, who their friends are, who they donate their money for. I believe that's the most important thing that drives people, is ultimately freedom. So we live in crazy times. The war in Ukraine continues. Inflation is at all-time high. Interest rates are rising all over the place. Petrol prices continue to go up. The stock market's all over the place. If you live in South Africa, the load shedding keeps everyone entertained. And so there's a huge amount of uncertainty around the world. And I could go on and on about Silicon Bank falling over, and then UBS, and missiles getting shot over Japan. We could go on and on and on about all the uncertainty that lives in the world. And that ultimately brings us to the principle of diversification 5.0. Because I'm going to explain to you what this is about. And I'm going to explain to you the 5 major lessons that I've learned by watching people over these times. So what is it all about? Well, at the end of the day, it's about creating a globally diversified passive income. That's the goal. I'm always I think it's very, very important that you get very, very clear on your goal or your outcome. And ours is globally diversified passive income. If that resonates for you, then I would just type in yes. Because if you want globally diversified passive income, then just type in yes. Now, the question is how to do that. Well, you've got to diversify across countries, currencies, assets, partners, and time. So it becomes really, really important to diversify across countries, currencies, assets, partners, and time. Now that can sound complicated. So don't worry about the complication. Just focus on the outcome. Do you want globally diversified passive income? That's the goal. Now, I want to talk a little bit about the pain of no action, because I hear this all the time. People come along to me and they talk to me and they go, Scott, been watching your webinars. I've come to your live events. I've been watching you for more than 10 years. And some of you might even recognize yourself, because I've been doing these talks since 2004. I've helped thousands of people all over the world in terms of sharing the knowledge that I've gathered through the years. And so, whether you are in these rooms or whether you're sitting in far bigger environments, the biggest one I've spoken to is 1,500 people on stage, but it's all the pain of not taking action. It's all the pain of people hearing the information, getting invited by people like Brian Walsh and Roger Hamilton, game farms where a huge amount of high net worths, and sharing with them, or even, weekends away where we were just always sharing, bringing in wealthy people, sharing their, what they had learned. And yet what I found so interesting is that whether it were live events or whether it was webinars, Clem Sunter, Neil Peterson, Dr. Dolph DeRoos, and trying always to share like what is happening in the world and how can you take advantage of it. And yet I hear it over and over again. Scott, I wish I'd listened to you 10 years ago. Scott, I wish I'd taken action. So my only request tonight is, if you're one of those people, do something. Don't necessarily do something with me, but just do something. Like don't get analysis paralysis, because getting a load of information is a complete and utter waste of time unless you actually do something about it. So I want to start with a study that was done by Harvard. And, the reason why people have so much pain by doing nothing is that statistically, by just listening to me tonight, in 3 months' time, you'll be able to recall less than 10% of what I'm actually teaching you. Less than 10%. If you were part of a group of people that are so that's like trying to do it all on your own, and literally 3 months from now, you're not even going to retain 10% of what we're going to share tonight. If you're part of a group, like a like-minded group, and you're kind of working together and you're asking questions, you're going to retain somewhere between 30 to kind of 65% of the knowledge and kind of, in that realm in terms of getting results. But if you want it done for you, and if you want to work, one-to-one and hold someone's hand and literally get the results 5 times simpler, safer, and faster, that's when it changes, where it literally becomes part of you. And you've got a 95% chance of getting the results. And that, for me, is what's really interesting. And I'm going to share with you tonight the value of doing something like that, because, the average person is getting a return of about 7%. Whereas, if you're part of a like-minded group that's getting a far better return, 14, 15%, you literally are going, it's in today's money, it's the equivalent of $50,000 plus. And so I often say to someone, would you invest $5,000 to turn it into $50,000 over a 10-year period in today's money? And there'd be very few people in the world that would say no. I mean, they'd probably say it sounds too good to be true. They'd probably say, I'll prove it to you. Okay, because it's about compounding interest, it's about time value of money, and most importantly, it's about getting access to the right information and the right partners in terms of the process. So that's the power and value of a mastermind, and I will share with you a little bit later what that's all about and how you can actually get those type of results 5 times simpler, safer, and faster, because that's what resonates for me. I've learned that in life, I want to get the information, but I want to put myself in an environment where I'm the dumbest, poorest person, because if I do that, I'm going to get my results 5 times quicker, simpler, and safer. So what are the 5 important lessons that we can learn from the wealthiest, sophisticated investors? And they are trends, risk, diversification, structure, and team. So let's run through these quickly. Let's look at trends. So what's really important in terms of trends. So I wrote this book 10 years ago, Property Going Global. I wrote it with James Painter. He literally wrote chapter 2, and it's all about currencies. And he's like the weatherman. Like he looks at patterns and he helps people forecast. And what's really interesting is that he did a session for us about a year ago, and he said the stock market was going to go down anywhere in the region of 50 to 85% over the next 5 years. Now that's something quite significant. Like, you should really understand that. And, he talks about currencies and how the dollar is going to decrease in value against a basket of other goods, and what you need to know about it. And, there's all these trends out there that people need to be aware of. And so, I believe fundamentally that you need to know, how to get the right information so that you can look at these trends. Another person that I'd highly recommend you look at is a guy called Ray Dalio. So Ray Dalio talks a lot. And just by the way, if you want the bonus, I will share with you at the end how to get the bonus. But Ray Dalio has a book called Principles. Okay, and I highly recommend that you go and read this book called Principles. But I've read the book. He's brought out numerous things on LinkedIn. I've spent months and years studying Ray Dalio, and I literally did a wealth hack for 90 minutes where I took everything I'm about to show you, and in 90 minutes I explained everything that Ray Dalio is actually sharing at the moment in terms of the overall strategy of what he's actually doing. And what he basically shares is you've got productivity, and you can see on the left-hand side you've got growth, and then you've got time. But through this is a bunch of cycles. You've got the short-term debt cycle, which takes sort of a span of about 5 to 8 years. You've got the long-term debt cycle, which is 75 to 100 years. You've then got the political cycle, you've got the social cycle, and you've got the economic cycle. And what's really, really scary is that they're all intersecting in this decade. Okay, now the last time we had a massive intersection like this was in the mid-30s to the mid-40s, which, if you do or don't remember, was the time we had the Second World War, and it's also when effectively the US became the largest economy in the world, and they took over the reserve currency. Do you think it's significant? I think it is very significant. So if you want to understand trends, it's really, really important. And Randall, yes, you will receive a recording of this webinar, masterclass. If you want more information on Ray Dalio, just type in there Ray so that we know, so I can make sure that we get it to you in terms of this process. Now, I believe that Ray Dalio is someone that you should be following. He manages the biggest hedge fund in the world. It's $160 billion, billion with a B. To invest with him, you need $100 million in cash. $100 million in cash. Now, I don't know about you, but I don't have $100 million in cash. But what I found absolutely fascinating and more important is that his track record over the last 40 years has been to get a 21% return year on year. 21% year on year for 40 years. Now, sure, it goes up and down, but the average is 21% per year. Now, do you think that you could learn something from a gentleman that has invested $160 billion or manages $160 billion and gets an average of 21% a year? Yes or no? So the book is Principles, but for those of you who put Ray down, we'll make sure we send you the bonus where I've literally consolidated everything from his books and his webinars and his LinkedIn down into 90 minutes. So if I look back at trends, and you look at 2008 when we had the last crash and the newspapers and the press were all over the place and everyone was panicking and, what do we do? What do we do? And everyone was really nervous. If you look at London, the property market lost 20% in London. And so most people tend to focus on this part of the graph. They go, oh, panic, panic, the market's gone down. But what you really need to be looking at is trends long-term. So you've got time and you've got price. And one of the most important things when it comes to London property and English property in general, but specifically London, is that one of the fundamentals of investing is supply and demand. You've got to have more demand than there is supply because that keeps prices rising. And so if you look at the long-term fundamentals, the long-term trend was that the market would be fine. So rather than focusing on the short term, you focus on the long term. I'll give an example of this. So there was a property in Canary Wharf, actually in a place called Greenwich, which is right next to Canary Wharf, one stop. Canary Wharf is the financial capital of London, the new financial capital of London. And Greenwich is literally over the river. They were building a new tube station. And so we bought a building there called City Peninsula. And this was the building here. There was a gentleman called Don van Rensburg who bought 4 units. There were 32 other investors that invested alongside him, including myself. And we bought property for £313,000 on average each. He then sold that property 2 years ago for over £1 million each. So he bought the property for £313,000 and he sold them for over £1 million. And he had cash flow positive income for over 10 years. Now, some people are going to go, it sounds too good to be true. No, it's not too good to be true. It's about trends. So if you look here, this is an article that came out in June last year. This company alone is putting in $8.4 billion into the Greenwich Peninsula. There's 17,500 homes being built, 84,000 square meters of commercial and retail, 20,000 square meters of cultural, and there was a tube station put in. Now, if you were watching these trends and you understood what was going on, it's not luck, because you know the markets that are going, you can see what's happening with regards to the trends. And so my question is, how many of you would have liked to have bought an apartment in London for £313,000 and sold it 12 years later for over £1 million, more than 3 times your money? And I'm asking you this question because I want them to become real. Now, there's a good chance that there's people on this webinar that heard me talking about those deals in 2009 and could have participated and yet chose not to. And the question is why? Probably because people thought, oh, it sounds too good to be true. No, rubbish. Trends, long-term fundamentals, and ultimately it helps you go through the process. I'll give you another example. Ryan came to me in 2009 and he wanted to start investing in Australia. So he bought 5 properties in Brisbane and Melbourne. They were the 2 best performing markets at the time. He bought 4-bedroom, 3-bathroom homes, which again is what Australians want. So not houses he wanted to live in, but what middle-class Australia wants to live in. And Australia had the best performing property market in 2009 and 2010, according to the G20, which are the top 20 economies in the world. And actually 5 or 6 years later, Ryan immigrated to Australia. He now lives on the Gold Coast. He sold off some of those assets, and it helped him literally get started in Australia and to set himself up in Australia. What about Michael and Lee Honeysett? Michael, literally came on a buyer's trip in February 2013. He paid $2,000 to me to come on that buyer's trip, plus he paid for all his flights and his accommodation, probably another $5,000. And I remember at the time he was like, sounds to be good to be true, and I don't really trust you, which, by the way, I'm completely comfortable with. I'm almost sure that there'll be lots of people thinking that, because that's just the way we are from a human nature perspective. Anyway, Michael was prepared. He knew that he needed to invest offshore. He knew that he needed to diversify, and he wanted to get the right information and meet the right partners. So, he got on an airplane. He flew with me and my partners to America, and he came for 2 weeks, and we flew around America, and he came and got the information, and he got the partners. And I'll never forget, one of the things that he really wanted was, he said, I got 2 daughters, and I want to earn at least $10,000 in passive income so that my 2 daughters have the freedom to not only work and study where they want, but ultimately one day to be able to live where they want. And I'm super grateful that, literally 10 years later, him and his wife and his 2 daughters are all immigrating to England, and they've got the complete freedom of choice. So they started buying residential homes, then they got into commercial. Ultimately, they built globally diversified passive income. And my attitude is, if Dawn can do it, and Ryan can do it, and Michael can do it, and plenty of women have done it, why can't you do it? And my question is, wouldn't you like to be our next case study? But you need to start thinking and noticing that I'm not showing you anything get richer. I'm showing you, 10 years of being proactive and ultimately building up to where you want to get to in terms of that process. And, Michael said, when I joined, it was the best money I've ever spent. So that was his $2,000 he spent to come on that buyer's trip. If you look at trends, there's a lot of research out there. And funny enough, in my book, Property Going Global, I go through all this. And more recently, we've just launched Wealth Going Global. And you can look at all the trends. But if you take the residential market, we literally started investing in Australia at this point in the curve. We started investing in England at this point. We actually pulled out of England for a while, and then we went back into England. And America, we literally started investing at this point within 3 months at the bottom of the market. And I don't tell you this to boast. I think if you get it right once or twice, maybe you can fluke it. But if you get it right consistently, it's not because I'm clever. It's because there's models, there's fundamentals, and it's literally based on facts. And you just look. So I believe, people that tell you London's the best place to invest property, it's rubbish, because there's good times and there's bad times. You've got to look at the fundamentals of where you should be investing. If you look here, this was results and research done by the SEC in America on, what the kind of the average stock market has got you, about 8 or 9%, and then, private equity about 12%. We consistently over the last 10 years, I help people get about a 14% return per year. So 7 or 8% income and about 6 or 7% capital growth per year. So when you're looking at trends, I often joke with people and I say, well, at the beginning of the year, how many of you went and read all the reports? How many of you went and read all the major trends from around the world, from all the top banks? And these are the top 19 banks. They do their whole economic, forecast on where the world's going and what you should be investing in. And I'm sure that all of you are here tonight went and read all of them. Or if you're like me, you didn't. And so, my question is then, well, do you know what a family office is? Because my philosophy in life, I don't go and do all the work myself. That doesn't make sense to me anymore. I've told you my epiphany moment. I used to go and do all the hard work myself. Now I just find someone that knows how to get the right information and how to partner with the right person. And so if you look at what a family office is, it literally is a private wealth management firm that is established by ultra high net worth family that provides the family with a selection of personalized services, including investment management, financial planning, estate and tax planning, philanthropic investment, concierge services, and more. To have one of these, you in the past had to have $250 million. Now, I know you probably don't have $250 million. There might be some that do. But I want to share with you the beauty of where the world's going, because as part of our mastermind, we've actually partnered with Callio, our family office. And every single month, they take our mastermind participants through the trends we need to know about at the moment. Literally, what is happening in the markets? Where are they going? What is happening with all the different asset classes? And if you notice here, like if you take cash in the dark purple, you'll notice that it actually goes up and it goes down. If you look at, large caps, they go up and they go down. There's trends, there's actual trends. But, you need someone like a family office to be talking through these trends to you so that you can make the right decisions in terms of your, understanding. So, what we did with Property Going Global is we literally upgraded it. We literally launched it a couple of weeks ago with Wealth Going Global. It's a 6-week course where you literally go out and you choose the top 5 countries. You choose the top 5 currencies. You choose the top 15 asset classes to invest in. You have a way of finding the right partners safely and simply and avoiding the risks and the mistakes that 80% of people make. You understand how to build a portfolio over time. And then ultimately you understand how to use technology. And this is just an example, if I talk about trends, where I literally took people through and teach them about how to look at all the trends. And I'll just give you an example of what I'm talking about here. If you go through to Wealth Going Global, you can see all the different trends here. I don't have time tonight to go into it as to where you can go and find it. But literally, it's where you go out and you get all the latest research. And if you go through it, this is just one of them in terms of The Economist, but you can literally go through all the major markets in the world and you can go and look at all the different returns. You can see them in real prices, nominal prices, income and rent, and you can actually see whether they're overvalued or undervalued. And this just gives you a classic example of how you can go out and get the right information and ultimately get the right trends. The other thing I want to show you here, which I found fascinating, was, when we did the session this month, in the month of June with our mastermind participants, Callio actually took us through all the trends. They take us through all the different markets, what's happening in the markets, the different assets, but they also were talking about the de-dollarization. And, a lot of people talk about China and they think, oh, China's this it's growing by 240%, but it's coming off such a low base. It only has 2.7% of the world's, currency movements, whereas the dollar has nearly 60%. And another thing that was interesting is when you look at the stock market, the FTSE 500, there's 10 companies that are based on AI, artificial intelligence, that are riding that market, and the other 490 companies are below. So always be very careful in terms of trends and just understanding what's happening with trends and how to read trends. And then what was fascinating is that I did a bonus session with Clem Sunter. Many of you might have been part of that. And Clem Sunter is one of the top futurists and scenario planners in the world, top 5 scenario planners in the world. And what was really, really interesting with him is that we went out, literally last week, and you can go and read his book, Thinking the Future, and you can go read all his articles like I've done. But ultimately, Clem Sunter is one of the best in the world at scenarios and trends and where the world is going so that you can make better decisions for you and your family. So hopefully that covers trends. Let's move to number 2. I'm going to speed things up. Risk. So another great story. It's 2008 and the world is crashing. Banks are crashing. Barclays Bank is crashing. And I phoned my uncle. I'm like, Uncle, what do I do? And he says, well, Scott, I'm investing in Coca-Cola. And I said, why Coca-Cola? And he said, well, think about it, Scott. No matter what happens in the world, people are going to drink Coke. They're in over 100 countries. They're completely diversified. They've got multiple different products. You often think of Coca-Cola. I like to drink Valpray sparkling water. They've got multiple products. So they're completely diversified. But most importantly, they pay a very good income. And I remember thinking to myself, that's interesting, a really good income. And then I read a book by Snowball by Warren Buffett. And interestingly enough, Warren Buffett owns 15% of Coca-Cola for the exact same reason, income. And what I started to realize was that most middle-class people and professionals like me were running around the world trying to chase capital growth. They're trying to put their money in the stock market and get capital growth. They're trying to run after crypto and get capital growth. They're trying to buy houses and get capital growth. But true wealth comes from income. Passive income is what provides you with freedom. And what I realized was that actually the number one way to manage risk is through income. And I realized that in a personal way. So I bought this first house in London in 2002, and it was just after September 11th. So you can see this is March 2002. It's just after September 11th. This was the house here. It's a terraced house. And what was really interesting is that, you know, England, all my mates were like, don't buy, you're crazy, whatever, because England was going to war with Afghanistan. You know, oil prices were expected to go up. Inflation was expected to go up. Interest rates were expected to go up. And everyone was panicking. And by the way, do you notice a parallel with what's happening right now, 1 years later? So all my friends, you know, said we're crazy. I said to my mate, listen, let's buy this house. It's a 3-bedroom. We can put a conservatory onto it. By putting a conservatory, we can turn it from a 3-bedroom into a 5-bedroom, which means we can now earn 5 income streams, you know, 1 from every bedroom. We were cash flow positive from day one. And what was interesting is we were able to ride the storm from an income perspective. Most of my mates bought property in 2007. They bought nice fancy apartments trying to chase capital growth. Then the market crashed in 2008, 2009, and they lost their bacon. And what was interesting, we never did. Our property just cash flowed all the way through, and I still own this property to this day, and it's still cash flowing nicely. You know, another example is medical buildings. When we were, you know, going around America, you know, in America in the last crash, places like Vegas lost 70%. Imagine losing 70% of your value on a house. But the medical buildings just kept paying income all the way through. And by the way, this has changed in COVID, and I will talk to that a little bit just now, because things do change as well. But what's important is that if you've got good assets paying you, you know, quality income, then you can manage both the ups and the downs, which is ultimately what you're wanting to achieve, because that truly will give you the freedom that you want. Another great example was in the last crash in COVID. You know, a lot of people were running away from office and thinking that office is a major issue. I mean, 25% of Silicon Valley is actually sitting vacant at the moment in the office space. And yet places like Texas and Florida experienced all this boom because everyone moved to those areas, like happened in Cape Town or Brisbane, around the world, the Sunshine States. And so they were buying up, you know, office buildings and making them COVID proof. Or COVID was not proof, anyway, like COVID friendly or whatever. And, you know, we've owned buildings with this company, and they've been going 42 years. They got $3.1 billion under management, and we've been, you know, getting positive dividends all the way through the process. So another sort of case study, this lady, Hilda, came over and started investing in America in 2013 with us. She started investing in commercial property. She then started investing in other assets around the world, building a globally diversified passive income. She immigrated to America in 2018. I actually managed to get her an invite to Necker Island. So this was her and I on Necker Island with Richard Branson. It was an amazing experience. But ultimately what happened, you know, is that, again, as part of her 10-year plan, her commercial properties allowed her the freedom to be able to immigrate to America, to be able to get going and to be, you know, set up as a global citizen. Right. Lesson number 3, diversification. So the single most important component to financial success, according to Ray Dalio, is diversification. And you can go and read all about it in his book, Principles, where he literally says you need to diversify across asset classes, within asset classes, across markets and currencies, and across time. And what was really interesting is that when Tony Robbins wrote this book, Money Mastered the Game, he went out and he interviewed 50 of the wealthiest people in the world, one of which was Ray Dalio. And he was so disillusioned that, you know, there'd been this crash after 2008, 2009. 10 million Americans had lost their homes, and yet all the taxpayers' money had been put back in to bail the banks out. And he finally persuaded Ray Dalio at the age of 75 to share his secret formula, his portfolio formula. And finally, Ray Dalio shared his formula. So, and what he basically said is you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem. And if you do that, you'll reduce your risk by 80%, and you'll increase your risk return ratio by a factor of 5. Now, what's fascinating, and I've done this for many, many years all over the world, is that 99.9% of people, when they hear that, their brains just switch off and they go, up, I don't know what the hell you're talking about, and I'm going somewhere else mentally. But actually, all that he is saying is that you need to invest in 15 quality assets that are not tied together. That's all he's saying. Invest in 15 quality assets that are not tied together. If you invest in 15 quality assets that are not tied together, you reduce your risk by 80% and you'll increase your return by a factor of 5. Now, just type in there, yes, if you would like to literally copy Ray Dalio, because I've told you already, he's got a return of 21% a year for 40 years. Not me, not my opinion, it's fact. 21% a year on average per year for 40 years. And how has he done it? He's literally done it with a portfolio strategy of 15 quality assets that are not tied together. That's it. It's not that complicated. We could literally go home tonight because we've shared it already. And this is what he had to say. It was a TED talk. He was being interviewed and they were like, what is the secret to investing? This is what he had to say.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So let's put up, and if you want to go and check it out, it's TED Talk Ray Dalio around the 26th minute. And he literally says you need to diversify well and in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. So let me share with you some mistakes I see people make. And I had a gentleman, he was actually a doctor that I know, and he went to see his financial planner, and his financial planner said, hey, listen, you must pay off your house first. And I sort of said, but that's interesting because if you look at the rand to the dollar, it's gone down by an average of 6% year on year for the last 40 years. 6% year on year, the rand has depreciated against the dollar. So now you're paying off a house, again, in a depreciating asset and a depreciating currency. Like it doesn't necessarily make financial sense. I want to give you an example of that. You know, people then say to me, oh, but don't worry, I'm going to go and buy apartments. I'm getting great capital growth. And I own a bunch of apartments. But they're not cash flow positive. I have to chip in money every month. But don't worry, in 5 years, I've made 500,000 Rand or 1 million Rand. I'm like, really? I did that maths. I owned an apartment in Cape Town, in Milnerton, and I bought it for 500 and I sold it for 1 million. I thought I was an absolute, hero. Until I did the maths and I realized that I was paying in on average between 2,000 to 4,000 Rand a month because the apartments don't cover the total costs. And you times that by 12 months and then by 10 years. And all that happened was I got paid back my money after 10 years. It's illogical. It makes no sense when you think of it like that. And it's in a depreciating currency. So that's why you take the global wealth index into account and, you take the cost of living over time and everything. And basically in South Africa, over the last 30 years, we've lost an average of about 29% of our buying power. Now, it actually gets a little bit more scary because I've literally just updated this for Wealth Going Global. And if we take the last 10 years, so you can see here 1983, 1993, 2003, 2013, and 2023. We've got a basket of goods. And you can see how, what used to cost us 500,000 Rand now costs us 20 million Rand. Our buying power has reduced by 90%, 92% to be exact. So I want to explain what this means. So I owned this house. I bought it in 2013. It's on Teeson Island here in South Africa. Teeson Island is one of the top 5 estates in the entire country. Neisner is one of the top holiday towns in the country. And on paper, you'd think I've done a phenomenal deal here. You know, I bought the property for $5.5 million. I sold it for 14 million. You know, it's about 161% return. And most people, when you tell them, they're like, wow, that's amazing. You know, why did you sell? Well, when you actually look at it in true money terms, I bought when the rand was sitting at 9 Rand 85 to the dollar, and I sold when the rand was at 18 Rand 19 to the dollar. And actually, even though it looks like I made a huge profit, I lost money in US dollars. Lost money. I lost $22,000 in US dollars. So if I'd literally taken my money and invested overseas in 2013, today I would have, you know, $22,000 more. But what's even more scary is if I'd invested that money in America in a quality asset and earned an 8% income return, cash flow positive income, plus a 5 or 6% capital growth, you know, getting me a net return of roughly 14% a year, I would have $461,000. And so I would have 3 times my money. 3 times my money. Now, how many of you do the analysis? Because again, I knew I had to do the analysis. I did the analysis and I was like, this looks like a great investment until you do the analysis. And then you realize it's actually not a good investment. Mistake number 2. Okay, fine. Well, then I'll go diversify and I'll invest in London. I'll buy an apartment. And what do people do? They go buy one apartment. They take all their money and they put it in one apartment. They got one tenant, one management company, and one income stream. And what happens if that one tenant stops paying? Whole house of cards falls over. What about another mistake? Well, I've been telling you all night how wonderful medical is. One investor I know invested in 8 hospitals in America, all through one company. And so again, all his eggs in one basket, one company, one team, one income stream, one asset class, one country, and one currency. The problem with medical is that medical looked hell of a good. Don't get me wrong. There are hundreds, if not thousands, of talks of me all over the world telling everyone how wonderful medical is. And then suddenly COVID came along and I learned a hard lesson as well. Because what happened? My brother's an anesthetist and they didn't need any of the, I've just forgotten the word now. Basically, the elective, that's the word, sorry, I couldn't remember. Elective surgeries. They didn't need all the elective surgeries. So all they did was do the COVID cases in the ICU. And so all the elective surgeries, you know, things like when I had my knee op or, you know, broke my wrist or all that sort of stuff, that's all elective surgeries. And the people that own the medical buildings are all the people that, you know, support those people. So all the radiologists and the physios and all the people that support the major hospital. And suddenly those people weren't earning any income and then they couldn't pay their rent. And suddenly all those medical buildings stopped paying any returns. And again, I know a lot of people where they've bought medical buildings and now they're not earning an income. So again, if you've got all your eggs in one basket, in one country, in one currency, in one asset class, in one partner, you know, you could say I've got lots of eggs, but they're in one basket. But what happens if that partner falls over or that asset class falls over? All those eggs break. And so my philosophy when it comes to diversification 5.0, and if I look at the last 12 to 18 months, I've personally invested in 10 different assets, 4 different continents, 5 different currencies, 9 different asset classes, and with 10 different partners. And that's what we call diversification 5.0. And what I love doing is looking and building investors' blended portfolios. So I had an investor, he had $100,000. I said, well, you know, let's look for a blend between income and capital growth. So we got him a total return of 15%. And then I showed him, I said, you know, you could invest in this strategy or that strategy, and this would be the outcome over a 20, 25-year period. And you can actually see there's a stark difference in the different scenarios over time and the impact that it actually has. And this is what we call diversification 5.0. Now, a good example of someone like this was Chad. You know, Chad invested with us in Australia in June 2012. He bought an apartment in Australia. He then invested in America in commercial buildings. He subsequently bought things called structured notes to our platform. And he's literally still living in South Africa, but with an entirely globally diversified portfolio and ultimately a global citizen and the peace of mind that most people are actually looking for. And so how important is it to diversify and to ultimately have asset allocation? And that's the question that I think you should answer. And here's a recording where Garth Wellman, who's the CEO of Calio, and Anthony Didham are literally taking people through asset class, what's happening with them, how do you diversify, and how important portfolio construction is.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So as he just said there, 85% of your long-term returns are going to come down to portfolio construction. And so just to give you an example, private equity. Now, most people don't even consider investing in private equity, and yet private equity outperforms the stock market over a 5-year period, a 10-year period, a 15-year period, and a 20-year period. If people look at their portfolios, on the left-hand side here, you got return, and at the bottom, you got risk. Most people have a balance, of bonds and stocks, which means they're at the lowest return and the highest risk. You want to be in this top left quadrant. You want the highest return with the lowest risk. You don't want to be in this bottom right quadrant, which is where the majority of people find themselves. And so the question is, how do you get here? And it's by having the right information and the right partners. What about this? If you take JP Morgan, the average return of the top 500 companies in America, the S&P 500, has been about 9.5% per year over 20 years. The average investor trying to do it on their own, 3.6%. Makes no sense. And so, when you look at return on investment, this becomes really, really interesting because someone actually asked me and they said, well, Scott, sorry, let me just get this up here. Where's it gone now? I have a spreadsheet to share with you, but it's hiding. I don't know where it's gone. And just make this smaller. Right, Mr. Spreadsheet, where are you hiding? That's not the one I want to share with you. So this one here is really interesting. So I tend to say to people, so I had this one gentleman, he said to me, well, Scott, why would I invest in myself? And, what would that return on investment be? And I said, well, look, what return are you making at the moment? And he said about 7%. So I've just shown you here the average returns across different asset classes, private equity, portfolios, and even what we're getting on average at 14%. I said, okay, well, so you're getting 7%. But what about if you were to get sort of 14% a year? And, he had $12,000 that he was starting to invest. And so I literally showed him that, over a 1-year period, the difference, would cost him about $500. But let me just open this all up for you. Over a 5-year period, it's now costing him over $10,000. And then I showed him, over a 10-year period, it's now costing him nearly $50,000. And then I showed him over a 30-year period, it's now costing him nearly $250,000. And that becomes really quite meaningful. So, where do you get the right information and the right partners so that you can make that type of difference? Because it has a significant impact of your life over a 5, a 10, and even a 30-year period. Now, some people say, well, I'm not going to be around for 30 years. You are, because if you're interested in generational wealth, then you should be, because it's not only about you, but it's about being able to hand it to your children in terms of that process. So, lesson number 4, structuring. And this one's really interesting because I have people all the time say to me, but this one lady, she was given inheritance 6 years ago. She was like, but I haven't done anything for 6 years because I didn't know about the right structure and I wanted to save on tax. And I was like, what? She had 20 million Rand or something in inheritance. And what she's lost in currency over the last 6 years, she could have more than doubled or tripled that in terms of what would have happened if she had got the tax and structuring right, and rather than having analysis paralysis. So again, go get the right information on the right partners. And then also be careful, because a lot of the financial planners will try and stick you in a little box, Mauritius or the Seychelles, And, you might have a bigger picture. One of our clients has immigrated to Portugal. He's got all his money in the Seychelles, and the Seychelles is blacklisted by the European Union, and now he can't access his money. So it becomes really, really important to have the right information and the right partners when it comes to tax and structuring. And a good example of this is Manu. So it's not all about what you make, but also what you might save. And Manu went out and invested and made mistakes and lost over $250,000 himself by trying to do it all himself. And then he found us and he started investing with us. And he's actually now one of our shareholders in the business in terms of the process. So I got a question for you. Who's feeling a little bit overwhelmed? Particularly if you're watching this for the first time, it is a hell of a lot of information. I get that. I talk fast. I'm high energy. We're doing this for 24 years. I've got a lot to share with you. I've helped thousands and thousands and thousands of investors, and I just want to help you make the right decisions for you and your family. So if you're feeling a little overwhelmed, I completely get it. But I got a question for you. If I was to, give you something where I could literally help you answer these 3 questions. Remember, we started with what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? And what if there was a system that I could statistically, help you get there 5 times faster, simpler, and safer? Can I have your permission to share it? And I'm only going to do it if I've got your permission. If I don't have your permission, I'll go home. I know how to do it, so it doesn't really bother me. But if I can have your permission, I'll happily share it with you. Just so that, because for those that are feeling overwhelmed, I know it's a lot of information, but you'll be surprised how you can actually do it simply and safely. So I'm literally going to show you how you can do it safely and simply over the next 12 months in terms of this process. Is that a deal? Thank you for everyone that gave me permission. I appreciate it. So reminding you that we started off in the beginning, it's about living a life unlimited. And how do we do it? We do it through diversification. There's a simple formula. We ultimately are wanting to create globally diversified passive income. And we want you to diversify across countries, currencies, assets, partners, and time. So one of the things that I learned was that I joined my first mastermind in 2011, and I got so much power out of masterminds, and I never really understood why until I came across this research about the power of a mastermind, and I want to share this video with you.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So my question to you is, would you like real and rapid business and life transformation? Yes or no? Because that's the power of mastermind. And you've got to be with someone who's prepared to get in the trenches. And I suppose you get to decide whether you think I'll get in the trenches with you and to help you get that real and rapid transformation. So that's why we created the Diversification 5.0 Mastermind. Having helped thousands and thousands of people do this, a lot of people were coming to me and they're saying, Scott, I know you've done it for lots of other people. I want you to do it for me. And I want you to hold my hand, and I don't have time. Time's a major issue for me. So I want to just do this quickly, simply, and safely. Help me do it. And that's why we created the mastermind. So who's it for? Well, it's for people that are into personal development, so people that ultimately are coachable. And again, those people that know it all themselves, it's not for them. It's for people that want to work together and in partnership. Passive income. So it's people who want to build a passive income of at least $5,000 in terms of that process. So it's all about the commitment to building that passive income. And ultimately, it's for people that already got their foot on the ladder. They already got some property, or they're already an investor, because for me, this is not for beginners. There's other things that people can do for beginners, but this is for people that want to build globally diversified passive income. But most importantly, it's for people that want to get there in the fastest, simplest, and safest way. and they want to do it with the least hassle and the least complexity. They know they've done it. They've built their own businesses. They've built their own careers. They know they can try go figure it out and do it all themselves, or they can literally cut through all the pain and get those results 5 times simpler, safer, and faster by getting the right information and finding the right partners. Who's this not for? It's not for complete beginners. It's not for people that want to do it all on their own. It's not for time wasters, people that are going to not show up, not make commitments. It's not for people with no capital. So, for me, as I say, there's other ways for people to start, but this is for people that are wanting to build globally diversified passive income. And it's not for difficult personalities. No disrespect, but for me, I work with you one-on-one, and I want to have some fun and get results in the process. So that's the formula. We're building globally diversified passive income across countries, currencies, assets, partners, and time. And so what is the mastermind all about? Well, it's got 5 simple stages. We've got a setup phase where we literally get clear on the outcome. I work with you one-to-one, and we get very clear on the outcomes. Then we get clear on your starting point. What do you actually have right now? So we know where you want to get to. We know where's your starting point. We then help you build a plan from A to B. So ultimately, it's called a wealth plan. And it's how you're over here, you want to get to here, how are you going to do it over a 2-year, 5-year, 10-year plan. So it's called a wealth plan to get from A to B. Now, most people don't even have a plan, but even if you have a plan, most people don't execute on the plan because life gets busy. And so this is where the mastermind comes into account, and we meet monthly, and there's 2 sides to it. The one is the accountability, the mindset, and the execution. So again, it's all about helping people get results. So many people have New Year's resolutions and they never actually achieve them. I'm not interested in that. I'm interested in results. And then it's about the investment and the investment rhythm. So 5 simple steps to help people get results. So let's just go into that a little bit more detail. If you look at the outcomes, I'm a certified global coach. I actually sit down. We get very clear. It's a one-to-one session. We get very clear on your top 3 outcomes, your top 3 measures, and we write them down. Then, most people are kind of caught up in their problem and their drama. I'm not interested in your problem and drama. I'm interested in what the outcome is that you're achieving. Once we've achieved the outcome, everything else is possible that we work backwards with. And as an example, there was a guy that joined the mastermind. He's a coach in Germany. He's been a coach for 27 years. And he said he absolutely loved the process. Then we go to the starting point. And this is where we analyze your current portfolio. And also, I work directly with Calio, who is our family office. So it's super exciting for me because they literally manage $600 million. They only work with 60 of the wealthiest families, but they've actually agreed to partner with us. And Garth Wellman, the founder and CEO, said, the 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. So I'm super grateful that we work with them. We get access to this amazing information where we work with them in collaboration. Together, we help build that wealth plan so that you've got a solid plan to get from A to B. And that for me is priceless in terms of having how to do that. And then it becomes about the execution and actually doing this on a monthly basis. So the one side is the accountability and the mindset. So, a lot of people, particularly in the current environment, find themselves in a waste state, withdrawn, fearful, inability to make good choices, demotivated. It's all about being in a towards state. How do you stay happy, ability to think clearly, creative, see new opportunities? And that's what a mastermind is all about, because it pulls you. So it's all about the mindset. It's about turning up once a month, and there's different modules that you've got for free, including time management, mental wealth, and flow. But what's much more important for me is the accountability tracker. And every single month, you're helping make sure that you're making measurable progress towards your outcomes. And again, I'm literally copying, the best practice from the masterminds that I've been part of around the world. You've also got an accountability coach between myself and my partner, Alex. 99% of individuals that have a coach report them to be helpful. 95% of those report them to be very helpful. And 96% report that they would engage in coaching. The best people in the world, whether it's Serena Williams or Tiger Woods, or the best sports teams in the world, or the best business teams in the world have coaches. Why would you not have a coach to get the results that you want? And then it comes down to the investments. And that's the 5 investment rhythms. And this is really interesting because every single month we run through a financial understanding. So we take one of the asset classes and we go deep into that asset class so that you can understand it. So whether it's multifamily real estate in America, which has been the best performing property asset over the last 10 years, or one of the many others, structured notes. Most people haven't even heard of structured notes, but you can earn between 10 to 14% in dollars, euros, and pounds. And 83 of our wealthiest 100 investors have been investing in structured notes for the last 10 years. And yet most people have never even heard of them. Then we do a market and currency analysis. So I told you that between James Painter on the currency and Callio on the market analysis. Now, again, I don't have time. I don't want to go and read long reports. So we literally do a TED talk once a month. What's happening in the market? Why did Silicon Bank go bankrupt? Why did UBS go out of business? What is the impact of inflation rates? Why did America hold the interest rate this month, whereas England put them up? And what impacts that can have on the market? Boom, 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 get results. That then goes into your portfolio construction and what you should or shouldn't be doing. Then it comes to investment and actually being able to participate in deals and deal analysis. And then finally, it's about reviewing and where you're at based on your overall plan and tracking your progress. And so it's literally that 5 simple steps to get you from A to B over a 12-month period. And then after the year, you return to step 1. So you've really got a choice. You can be like I was when I was younger and try and do it all yourself, but you've got a less than 10% chance of success. You can try and do it in a big group and by turning up to webinars and stuff like this, and you've got about a 30 to 65% chance of success, which is fine. But there are those people that want to get there 5 times simpler, safer, and faster. And they know that by being part of a small, like-minded group, by working with someone like me, they're going to get there. And then they've got a 95% chance of success. And they're going to get there a lot simpler, safer, and faster. So if people are interested in this, what do you get? Well, you get priority access to myself and the team. You'll get access to our tax and currency partners. You'll get access to our asset mastery, where you can literally go into the details and you can learn about each one of these asset classes: structured notes, multifamily, medical office, industrial logistics, co-living, or what's known as purpose-built residential. And interesting enough, just this month, we had a whole review on the wealth report, which is what the wealthiest 526,000 people in the world are doing. Where are they investing? And my philosophy is, if they're investing in one sector or in a group of sectors, and what is their asset allocation, you should be copying them. And then next month, we're actually doing gold and silver. So, it's really awesome. Every month we're learning about the different asset classes in terms of that. The next bonus is you'll get access to Wealth Going Global, which is all about building the solid foundation. So you understand which are the countries, which are the currencies, the assets, the partners, the time, and ultimately the smart investing. We'll also give you access to a bonus session we did with Clem Santa, where you can understand the 2 different scenarios for the global economy, the 10 different flags and the probabilities. And then for the South African economy, the 2 different scenarios, the 5 flags and the probabilities, which we also talk about at a mastermind level so that we can use them effectively in our investment thesis. And then bonus number 6, you'll get access to the 12 months of the Wealth Hackers, which is all the online material. Now, I know this feels like a lot, but don't worry. Most people that join the mastermind are time poor. This is it's all the foundational stuff, all the substance that you need, because I'm determined to help you get results no matter what you need. Access to the best immigration agents. As you've heard me say all night, I've helped people immigrate all over the place. And then finally, if you're interested in buyer's trips and coming overseas and actually seeing what's happening. So if you want to apply, it's quite simple. It's a one-to-one call. You literally go to diversificationmastermind.com. You find a slot that suits you. It's an application call. So it's you and me, one-to-one for 30 odd minutes. And ultimately, I want to understand what you're trying to achieve. I want to be able to see and identify what the risks are so that I can see if there's a mutual fit. I want to know what you're trying to achieve. I want to explain what we do, and we want to see if there's a mutual fit. And most importantly, I want to see if you qualify. Because I can only onboard, I work with Callio, I can only onboard a few people. And so I want to make sure that I'm setting people up for success in terms of getting their results. I only want to work with people that are committed. So please, I do ask you to respect my time. I will respect yours. And if you do make a booking, to turn up on time, because it's really, really important for me I'm doing this one-to-one because it's a one-to-one relationship and I want to work with the right people. I want to help people get results, but I do ask you to respect my time, just like I'll respect your time in terms of getting those results. If you are interested, and I highly recommend, then go to diversificationmastermind.com, book a call with me. I know I've got some slots available tomorrow. I'm actually going to Cape Town on Thursday and Friday, Saturday and Sunday. I'm going to a private game farm with some large investors. So I'm not available for the rest of the week. And I do recommend, setting up a one-to-one as soon as possible and getting the momentum. If you're interested, just type in there diversification, or no, not diversification. Let's put in mastermind. It'll be easier. Just type in their mastermind. If you can't find a booking that suits you, just type in their mastermind in the chat box and the team will reach out to you and we'll find a time that suits you in terms of that process. And then finally, just in terms of some logistics, I can only onboard a certain number of people based on the availability of myself and Callio. We're pretty busy at the moment because we're in the middle of the Wealth Going Global launch. So I've only got, I know one person joined last week in terms of the mastermind, which means there's, for the rest of this month, there's only one more spot that is actually available. And then we'll open up some new slots next month. But if you are interested, I highly recommend booking and setting up a call, and we can see if we can onboard you this month, or if we, can onboard you next month in terms of the process. It is quite an interesting time of the year because, believe it or not, we're at the end of Q2. We're halfway through the year, and I tend to find that a lot of people kind of get the year going, and then particularly in Q3, in this period now, and sort of that August, September, October, they really start to say, one of my goals was to diversify. One of my goals was to really get that process going. And so I highly recommend, if that's you, you take action now so that you can get the momentum into the back end of this year and get the results that you want to in terms of that process. And just in my interest, the average person's return on investment is 344% from coaching, and businesses see as high as a 700% return in terms of that. So in terms of a satisfaction guarantee, you could probably pick it up. I'm about 150%. Whatever I do, at 150%. I'm going to give it whatever I take to help you get your results in terms of this process. And, really for me, I want to bring like-minded people in and do whatever it takes over 12 months to help you build that globally diversified passive income. And then just back to the return on investment, this is really interesting because I had a gentleman and he said to me, Scott, well, how much would it take? I'm not quite sure why this thing is not sharing. Sorry, my nose is all funny tonight. It's cold and itchy here. I'm just going on here. My computer's playing games today. Anyway, let me just go back to that spreadsheet I was wanting to share with you. And what was really interesting, if you take return on investment, and I said to the gentleman, well, if you were to invest $5,000 to be part of the mastermind, like if you were to invest in yourself $5,000, and if you were to get the returns that I just said, and you were starting with $12,000 capital, over a 1 year period, it wouldn't really make sense. In today's money, it would make you about $400. But over a 5 year period, in today's money, it would make you $11,000. And there's not a lot of people that wouldn't invest $5,000 today to make $11,000 today in today's money. Like, it's a no-brainer. Okay, what about if you, over a 10-year period, it's $5,000 to make nearly $50,000, and over a 30-year period, it's $5,000 to make nearly $750,000. And so when one looks at that from a return on investment perspective, it just really makes sense to people that understand the power of doing stuff over time and getting access to the right information and the right partners in terms of that process. So it just sort of, people asked me about, return on investment, and I thought it was quite interesting just working that out overall. So if you're interested, literally go to diversificationmastermind.com. I can see there's a couple of questions here, which I'll try and answer. It is an application call. It's about 30 minutes. It's very simple. I just sit and understand what you're trying to achieve, and then I see if you qualify. And on the assumption you qualify, I explain in a little bit more detail how it works, and then we can see if there's actually a mutual fit in terms of that process. And again, I only want to work with committed people, and there's generally only 1 to 5 spaces available. This month, there's only 1 at the moment. Here's some fun pictures. You know, this was us. This is how we used to have to do it 10 years ago. This is us in New York. It was a freezing day. It was February. This is us in Times Square. This is actually us with Dr. Dolph DeRuis on the steps of the courthouse in Phoenix, buying properties in 2011 when it was crazy. In a helicopter down at the bottom of the Grand Canyon, having some fun at the bottom of the Grand Canyon, going to see a show in Vegas, buying houses in, I think this was Atlanta, more houses in America, looking at multifamily in Florida, opening bank accounts in America. And, you know, I think you get the gist of how we used to do it 10 years ago. You know, this is how we used to get the right information and go and meet the right partners. And the beauty now is you don't need to get on an airplane. You can do it all from the comfort of your couch. And just gives you an example of the different pictures, and also having a bit of fun on Beale Street and outside the New York Stock Exchange with the bull. This was up in North Dakota, which is where the fracking is, and even having some fun with regards to not Oktoberfest, what's it called? Halloween, in terms of that process. And you can also see, you know, these are some of the wealthiest investors in South Africa. They own one of the largest privately owned shopping centers, consortium of shopping centers, and yet they still came on buyers trips to get the right information and get access to the right partners. You know, my question is why I believe that you should work with us. Well, there's many excuses and reasons that people don't, but there's 3 principal reasons. The first is that they don't have the time. The second is that they don't have the money. And the third is that they don't have the knowledge. And what I've learned, particularly when it comes to the mastermind, people know that time is their most valuable asset. If they can condense time, then they can get their results a lot quicker, simpler, and safer. They also know that, you know, by investing the money, they're going to get the return on investment. They're going to get the results that they want. And finally, they know that to get the knowledge, they got to get access to the right information and the right partners. And so for me, the mastermind is being created for people that understand and resonate that. The other reason that we believe you should work with us is we're the only people that actually do global diversification. Everyone else specializes in property in London or medical buildings in America. Whereas, you know, we've helped people invest around the world in different asset classes. And I fundamentally believe it's really important to build that global diversification. Why a mastermind, and what have I invested in myself in masterminds over the years? You know, I was part of Singularity University for a year with Peter Diamantes. That cost me $14,000. I was part of Roger Hamilton's Crystal Circle with some of the top entrepreneurs around the world. That cost me $25,000. I was part of Maverick, which is a big American society. That cost me $40,000. That actually got me invited to Necker Island, and I spent 2 weeks with Richard Branson on Necker Island. And I've also been part of Tony Robbins' Business Mastery, which cost $50,000 a year. And that was a picture of me and him on Fiji. So I've learned the hard way that it's really important to invest in myself. I know when I, you know, invested $50,000 for a year, my mother thought I was absolutely crazy, but I met some incredible people. It got me to change my mindset completely. And I actually got a 10x return on that investment in you know, less than 12 months in terms of that overall process. So I want to bring you on to the final lesson, which is team. And, you know, what's really interesting when you look at what we are used to in terms of the way it currently works is that, you know, you go along to your financial advisor and a financial institution and an investment vehicle like a REIT, and, you know, there's many layers and lots of costs, and it's very difficult to do, you know, or you try and go and buy a property offshore and there's 16 different middlemen and there's lots of hassle and complexity and difficulty. And, you know, what I find really interesting is if you want to do it all on your own, you know, you can go out and you can do the due diligence and the legal and the SPV and the reporting and the KYC and the tax and the legal and the brokers and the blah. Or you can keep it simple, and then you can do 4 simple steps. You can sign up, you can set up an account, you can browse and invest, and you can earn an income. So do you want to go for the hard way, or do you want to go for the safe and simpler way? You know, also back to due diligence, you know, we spend millions of dollars over the years, flying all over the world, meeting with partners, and, you know, building the right team. And you can literally do it all yourself, which is fun. You know, I'm happy to share with you how to do it. But ultimately, it'll take, in my experience, it took 2 decades. Or you could literally, if piggyback on the back of people that have already been doing it for decades, and to get the right information and the right partners into terms of that process. And I'll just give you an example. There's a building at the moment that myself and a number of the masterminders are investing in Phoenix. It's an industrial building. Now, Phoenix is one of the top 3 states in America to be investing in. It's got the top population growth in America, which is really good for the fundamentals. We've got a partner there that's been in business for more than 20 years. He's managed to fix the debt for 7 years, which is unheard of in the current raising interest rate cycles. You know, you're getting a 7% cash on cash return. So that's a 7% income return, a 17% annual return, or IRR. You're looking at a 3 to 5 year hold. And if you put in $100,000, you're looking to aim to double that in a 5-year period. So it's called a 2x multiple. You know, the ROI is roughly 20% a year, and ultimately it's closing at the end of June. And I just want to give you an example, like that's the type of thing. This is an off-market deal that you know we get involved in through the mastermind in terms of what we're actually doing. So let me go to the final thing I wanted to say around team is that, again, you can do it all on your own, or you can actually have your own family office. Now, previously you needed $250 million. You don't need that anymore. You know, Callio are partnering with us in the mastermind, and everyone that's part of the mastermind actually gets access to Callio, to the information, their team, and their research. And so a good example of this, Alan was a highly successful property investor and property developer. He came to America. He actually invested, you know, a lot of money in his first deal, and then subsequently invested in multiple deals with us after that. And he learned how to get the right information on the right partners. But he knew the power. Rather than trying to do it all himself, he came with us, he invested with us, and ultimately now he's immigrating to America. And so I always ask this, you know, how many of you 10 years from now would like to be a case study? How many of you would like to be like Michael Honeysett, where you were like, hey, I made a decision, I took action, and 10 years later, look at the results I got? Or are you going to be like so many other people 10 years later and go, I wish I'd done something, but I didn't. And so why not join 4,000 other investors? Whether it's wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empowering your children, immigration, I don't really mind what it is. You know, for us, it's all about living a life unlimited. And if it is something of interest to you, literally go to diversificationmastermind.com and sign up. This is the formula. You know, you can do it all yourself. There's the formula. Build globally diversified passive income, you know, diversify across countries, currencies, assets, partners, and time. You're very welcome to do it yourself. I've literally shared with you what I've learned over the last 2 decades from some of the wealthiest investors in 178 countries. Or you could join the mastermind. So you can either do it yourself and take the time, the effort, the energy, and the decades and the mistakes, or you could do it the safe and simple way, joining the mastermind and do it 5 times faster. And that was my epiphany moment back around 2010, and hopefully I've shared it with you tonight. How do we do it? Well, there's 5 simple steps. You know, we get clear on your outcome, we get clear on your starting point, we build your wealth plan from A to B, and then it's the accountability over a 12-month period. The mindset, the accountability, and the execution, and the financial understanding, the financial knowledge, and the investment in terms of that process. So again, I'm not going to go through all the details, but it's very important to get clear on your outcome. Then it's very important to get clear on your starting point. Then we build that wealth plan in terms of the overall process. And then it's all about that accountability and that execution and the mindset, and consistently pulling you in the right direction, and ultimately the accountability tracker and the accountability coach. And then from the financial side, don't underestimate the power of the financial stuff. Working with Callio, working with James Painter, working with the best partners in the world to give you the right information and you know, access to the right opportunities. And that's it. 5 simple steps of how it all works. To remind you again from Harvard, if you do it, you know, on your own, you've got less than 10% chance of success. If you do it together in a mastermind like this, you've got about a 95% chance of success. And I remind you also that return on investment. You know, people say, oh, you know, I'm not sure if I should invest upfront in myself. Well, you know, over a 5, 10, you know, 10, 20, 30-year period, it's an absolute financial no-brainer for people that understand the maths. And when someone actually asked me about it, I literally went and did the maths. And again, there's no such thing as a get rich quick scheme, but people that understand how compound interest worked and how getting access to the right information, the right partners can dramatically reduce your time to getting your results. They understand the value of investing in themselves. Actually, funny enough, Warren Buffett says the number one investment you can make in the world is in yourself. So just to remind you of the bonuses, you get priority access to myself and the team. You get access to our tax and currency partners. You get access to asset class mastery, which is all the previous sessions. You get access to Wealth Going Global and to Clem Santa's Masterclass, to the 12 months hackers subscription, the best immigration agents, and ultimately, if you want to come on buyers trips, you get accessibility to that as well. And so that, ladies and gentlemen, is everything. I will go through and check if there's any questions. If you are interested, just go to diversificationmastermind.com, find a time, because it's linked to my diary, that suits you and suits myself. If you're in a time zone, now, just by the way, in the mastermind, we've got people from England, New Zealand, Germany, Australia, Zimbabwe, South Africa. There's one gentleman from Mexico signing up. So from all over the world. So if you're looking for a time zone that doesn't suit, or you can't find one that suits you, or you're not available tomorrow and you can only do it next week, then just type in there mastermind. Just literally type in the chat box mastermind, and the team will reach out to you and find a time that suits you in terms of the overall process of how it actually works. I will come back, Craig, and answer your questions now quickly. I just want to finish off with a few more pictures. This is us in Times Square, having a bit of fun playing ice hockey not playing, but watching ice hockey in New York at Madison Square Gardens. Outside the stock exchange in New York, buying medical buildings in America, buying more houses, having a bit of fun with the group that was there. Again, learning from partners. It's all about getting the right information and the right partners. Now, again, 10 years ago, you had no choice. Come on an airplane with me. Come with me to England. Come with me to Australia. Come with me to Europe. Come with me to America. I mean, just 4 trips would take you, the rest of this year. But now the beauty is you can join the mastermind. You can literally achieve so much more over a 12-month period. It's so exciting in terms of where the world has actually got to in terms of, this was a bullfight in Texas. This is a building that I actually invested in back in 2015. It's not a great picture in terms of the light, but this is one of the most beautiful buildings. I must actually update this picture because I was so proud. I never thought I'd ever own a building like this. And by the way, I don't own the whole building. I just own a piece of this building. And again, learning from Dr. Dolph de Roos, this was actually us, in a negotiation on a deal, basically. And this was Paul Shalanda. He helped us invest in 7 medical portfolios in Atlanta. All of them were successful. It really reminds me of how important a partner is, because he's in the medical space, but that doesn't mean medical's bulletproof, because a number of other partners have not been successful. This was another building that we invested in and bought. This is us doing buyers trips in Hong Kong, actually, and trying to understand the market in Hong Kong and China. More commercial buildings. And like I said to you, I think you can probably realize, and I'm even losing my voice, is that I'm 150%er. If you get in the trenches with me, I joke with some people, they need the carrot, other people need the stick. But what I'm fascinated in is helping people get results in terms of the overall process. So that's all from me. I will come to the bonuses now. Let me just answer and see if there's any questions. If you're interested, just go to diversificationmastermind.com or just write in there mastermind. I just want to see, I see there's a couple of questions come through here, so I just want to answer them. Curious, what percentage of your mastermind members or candidates are from the US? So Jay, not that many actually. We've got mainly from Europe, Southern Africa, and Australasia in terms of the process. So Andre says, sorry, Scott, Bitcoin is better. No problem, Andre. Interesting how many investors have come to us and they said, and one of the asset classes we look at is cryptocurrency. So it's not for or against Bitcoin, but I just don't believe in putting all my eggs into one basket. I do own Bitcoin as well. But yeah, it's interesting. If you put all your money on red or black in the casino and you get it right, you look like a hero. But if you get it wrong, you don't look like such a hero. Craig said, I missed the first hour of this session due to a combination of load shedding, cooking schedules, and children's study schedules. I need to watch the recording. I saw, the part I saw was interesting. So that's perfect, Craig. I'm happy to share with you the recording. Just reach out to myself or Shane, and I'm happy to share the recording as soon as we put it up. And for Corin, you know, you put Mastermind there, and Abdul, great. I look forward to sitting with you one-to-one. Then just in terms of Randall, will this recording be available? Yes. For those of you who put in Ray and other, you know, bonus sessions, we'll share it with you. For Mezzo, I suppose you take into consideration the maintenance costs of these properties and offset those for the profits completely. So often we talk in net return. So when you talk cash on cash, you're talking net return. So if I talk an 8% cash on cash return, it means if you invest $1,000, you're going to earn $80 a year, which is a net return of 8%. And then Anonymous, is there amount a minimum in terms of the amount of capital one should have access to in order to qualify? It's a good question. I get asked this all the time. You know, if you're using a platform, you can invest from as little as $10, you know, a month, or not even a month, $10 once off. But what I tend to find is that for people that are part of the mastermind, you know, you probably want to be starting with sort of $10,000 plus in terms of capital, or at least the ability to invest, you know, $500 a month, you know, along those lines, to make the mastermind worthwhile. If that's, you know, too much for you, there are other ways to participate, you know, with Wealth Going Global or the Wealth Hackers. So we have created different things for people at different levels. But just like when you travel on an airplane, you know, if you fly from Sydney to London, you can go economy class, you can go business class, or you can go first class. It's all the same airplane, but it's a different level of service. You know, for us, the mastermind has been created as our first class product. So there are other products if you know, it doesn't suit everybody. Victor's asked for a copy of the presentation. So yep, Victor will share with you the recording in terms of the presentation. I'm just going to finish the last couple of slides because I want to share the bonus. I know it's getting late. So we do have another bonus, which is also, we did a global review with our Calio team in February, and we'll share it with you. It's a bunch of short videos, which you can get access to around the market conditions and what is actually happening. And if you are interested in the bonuses, Shane and I feel very strongly that whenever you turn up, I mean, you've invested nearly 2 hours of your life, your time is a very, very valuable asset, is just go in and go to the bonuses, you know, because whether you take action tonight, whether you set up a meeting with me and the team, you know, so be it. But if you haven't, you know, we still want you to walk away with value. And, you know, so go to the bonuses and, you know, take advantage of the bonuses in terms of where we're at. If you are interested in a call, it's quite simple. Just go to diversificationmastermind.com and you can book a call with me. And I want to kind of finish. And, you know, this for me is something that I love. It's an African proverb. If you want to go fast, go alone. But if you want to go far, go together. And I think it sums up everything we've discussed tonight. You know, myself, when I was younger for 14 years, was work harder, tie, stress, work harder, try to get more information, fly all over the world, find new partners, make mistakes, waste money, lose money. And then I realized there was just a much, much simpler way of doing it by getting access to the right information and the right partners. So this was me going fast, hustling, doing it all on my own. But I've realized if I want to go far, go together. And as Clem Santa says, the 21st century is all about collaboration and partnership. So for those people who resonate with that from a collaboration and partnership, I look forward to setting up a call with you. If you do want my details, there is my email and my mobile number. You can reach out to me on WhatsApp. And I will just go back to this slide here. If you want to set up a one-on-one call, just go to diversificationmastermind.com. If you are watching the recording, you can still go to this link and find a time for the team, and we'll find a time that suits you in terms of the overall process. Okay, I am officially losing my voice. I've been on meetings since 8:30 this morning. I presented for 2 hours at lunchtime and I had a 3-hour board meeting. So today has been a long day of presenting, but I'm also very privileged. I get to do what I love. So thank you very much. And if this is something that you enjoyed, and you think it'd be of value to others, let them know. Shane and I do this presentation live about once a month, just to let people know, because we fundamentally believe in diversification as an opportunity. Ryan has said, what time investment over period of coaching required? So Ryan, it's about 3 hours a month in terms of the overall process. So it's not a huge time commitment, but ultimately it's about getting results. So look, there's a lot of supporting material that you can go away to get substance. I believe if you want to build a tall building, it's really important to do it on a solid foundation. So there's a lot of substance that we'll give you access to. But for people that are time poor, it's 3 hours a month, to get that information and to ultimately get results. And if it is something of interest to you, and particularly if you're thinking about time and stuff, Ryan, I'd highly recommend you and I set up a one-to-one call and we can go through it in more detail. Reynolds has said, apart from the capital investment, is there a joining fee or subscription amount to join the mastermind? So Reynolds, there is not a subscription amount. There is a one-off investment to join the mastermind. And for those people that resonate and want to have the one-to-one, I suggest we go through that and I can take you through how that actually works and what the options are. Let's see, I've just frozen. I am still there. Thanks for the kind messages. Sibo, I'm glad you enjoyed it. Andre, thanks a lot. Thanks very much. I appreciate it. Okay, ladies and gentlemen, I'm not sure if there's any other questions. Let me know if there's any questions. If you enjoyed it, please share it with others. And, I really, really enjoy the privilege of being able to share with everyone. 24 years is a long time to have been investing internationally, helping thousands of people and watching a lot of people make mistakes. I find actually very, very frustrating, and certainly trying to share with people that they can learn, and not make the same mistakes I made. And that's why I like to finish off with this saying, if you want to go fast, go alone. But if you want to go far, go together. And that's why we created the mastermind. It's our first class. It's the ability to work with me one-to-one and the team to help you get results. And like I said to you, the type of people that resonate and want to join the mastermind are people that want to get there 5 times simpler, safer, and faster. They understand that time is their most valuable asset. And ultimately, they look at their future self over the next 10 years and they say, right, I want to make an investment in myself now so that my future self has the choices and decisions like so many of the people I've shared with you tonight. And so I hope you enjoyed that. Have a wonderful evening, no matter where you are in the world. And most importantly, thank you for your time tonight. Whether you take action tonight with us or you take action with other people, I don't really care. But please take action and make sure that you make the right decisions for your future self. Good night.